Today is October 2nd and it's 8:39 p.m. Eastern Time. This is the daily chart for Palantir, ticker symbol PLTR, and as of Friday's close, it closed at $24.33. So this is my second recording of Palantir because my first recording was back on August 23rd, which is right here on this candlestick. And in that recording, I identified 2625 and 2115 as the local support and resistance levels. In that recording, I also identified that this gray box would be an area of concern because I was anticipating a pullback sometime in this gray box. And since recording this status check, 30 days later, here we are, price is below 2625. And I was waiting for a confirmation to enter a position, and Friday's close was a huge flare for a trade entry. And the reason for that is in technical analysis, this has been identified as a hanging man candlestick pattern, which is a trend reversal. So other than this double top, right? So a double top is also a bearish signal. So here we have a double top. In addition to that, there's this hanging man candlestick. Now, I'm not making this candlestick up. So what I did was I went to Investopedia, and this is their article, Understanding the Hanging Man Candlestick Pattern. Now, I'm not going to read this whole article, but here's the link up here. So I just want to highlight what they said or what they described. So here it says, the hanging man represents a potential reversal in an uptrend. While selling an asset solely based on a hanging man pattern is a risky proposition, many believe it's a key piece of evidence that market sentiment is beginning to turn. The strength in the uptrend is no longer there. So, was there an uptrend? Yes. Also, there was this double top, right? So, further, the hanging man explained, the hanging man occurs when the two main criteria are present. The asset has been in an uptrend. Check. The candle has a small real body. Yes. And a long lower shadow. Yes. So this is a wick. There is little to no upper shadow. Okay. So this is exactly what they're describing here, all this, right? It wasn't an uptrend, and they describe it exactly as to what I'm seeing. So just in case anyone says, you know what, it looks similar, but it's not. But here, this is their mugshot, right? So if there was a police lineup, I would say, yeah, that's the guy. He did it. This is it. This is him. This is the one. Right, so I'm seeing exactly what Investopedia is describing. So, do I think there's going to be more downside based on what I'm seeing? A double top here, a hanging man here. The S&P 500 has been volatile the past week and a half. I mean, all of those variables. To answer that question, yeah, I would say there's a high probability that there's further downside, and the ideal spot would be 2115, right? And not just because that this is a support level here, it's just that if I toggle over to the weekly time frame, price does come down. Like when it pulls back from a high, it eventually came down to 2115 or a little below it, but it hit the 21 price level. Here's another one, right? Clearly it shows a pullback hitting 2115 or below. Now this has the potential to repeat right? So if history repeats itself, it shouldn't surprise anyone that 2115 would be the first place it would gravitate to. So if I go to the lower time frame, right? So here, $26, and within 30 days, it's at 2115 before gradually recovering and heading back towards the upside. Here was it touched 26. What is this? The high of 26.20. So it missed it by 5 cents, but it's still, it was a grind down. It came here once, retested it, and fell through. Now, this is what I think is going to happen if price does continue dropping this week. I don't think it'll bounce. I think it'll just come right through it. That's my opinion. I'm no one. It doesn't matter. So here's another level. Price 21, 26 to 21, and here's our first double top, right? And then price consolidated here at 26 before ultimately touching 21 about a month later. So with all of this, right, being, now we're going to formulate an educated thesis or hypothesis as to where price is going to go. So I'm in the camp that if price does come down, I'm looking at 2115 as the ideal area. So with that, in anticipation to a pullback, I did enter a position Friday. I didn't short the physical shares. I did purchase puts, specifically the October 8th contracts, which expires in 6 days. 6 days, it's not really 6 days because it's including Saturdays and Sunday. So there's essentially 5 business or trading days left in the life of this contract. So I need price to really drop, right, inside a week. So I did pick up the $24 put, which is 33 cents away from being at the money. I picked up 4 contracts. My entry price was at 56 cents per contract. It closed Friday under 55 cents. And since entering this trade, I'm down $7.20. So my trade entries, again, I was waiting for a confirmation to see how Friday was going to close. And I literally got into the trade with here, my last contract I purchased was literally 35 seconds before the market closed. Meanwhile, the first 2 I bought was about 2.5 minutes before the market closed. So this was really at the tail end of Friday's trading session. So I wanted to get in on Friday rather than holding out for Monday, because if volatility picks up tomorrow night when the futures market opens, then there's a probability that we could see a gap down going into Monday's opening bell. So that's why I prefer to get in on Friday rather than on Monday. So just to recap the math, my entry price was rounded up to 56 cents per contract. Each contract represents 100 shares. Each contract is worth $56. I picked up 4 contracts. So not including commission, of course, this trade to hold 400 shares of Palantir for 5 days, it cost me $224 out of my own pocket. Now, the alternative was to short these shares. So if I was to do that, so using Friday's close of 24.33, if I was to short it for, just to hold it for 5 days, so 24.33 times, what was that, 400 shares? It would have required a capital of almost a little over $9,700. So I would have rather risked the $200 plus than almost $10,000 for a short-term trade. And because my strategy or preference is just to capture the breakout, or in this case, the breakdown, right? I just want to capture the first burst towards the downside. So if there is that gap down, that's what I'm looking for. So that way, the premium on my contracts will grow rapidly. So if I expand the option table, right? So here's my $24 strike, and I'm literally at the money because all that's highlighted would be considered in the money. And if my target was 21, right? So it's right here, 21's right here. And Friday closed at $7 or 7 cents per contract. So with $100, I could have picked up maybe 14 of these, right? But I prefer to be closer at the money than, even though this is still probable, I just want to capitalize on something of more of a, not like a 100% guarantee, but increases my probability of having a successful trade. So if price hits the 21, right, then the 21 would move up to where the 24 level is. So price would go from 7 cents to 54 cents. And then my contracts would move up 3 spots as well. So that would put it 1, 2, 3. So that would make my contracts value from 55 cents to $2.75, or in this case, that would be $275, right? So if it's $2.75 times 100 shares per contract times 4 contracts, I'm looking at a best case scenario at $1,100 trade by the end of Friday. That's if it takes all week to grind down to $21. So, yeah, so that's it. That's the thesis for this trade and my outlook for Palantir. And we'll see what happens at the end of the week. I was actually going to make this recording tomorrow night, but because the futures market is open, if I do see a setup in that market, then I may enter a trade there. So that's why I thought I'd make the recording tonight. So that's the outlook. Again, if price breaks below 21.15 inside this expiration Friday of October 15th, then I'm looking at 1860 as the next potential area where price would head to. So until the next video, I'll see you.